Hello everyone, this is Marshall Gittler speaking. I'm going to discuss the main issues facing the FX market in the coming week beginning the 19th of March. We've had quite a confusing week, as seems to be the norm nowadays. It's not so simple anymore. Sometimes the factors that push the dollar down one week can push it up the next week. What's important is not only what happens, but how the market interprets what happens. For example, the dollar fell a few weeks ago when Trump announced tariffs on steel and aluminum. The past week, however, it rose overall on reports that he was readying more targeted measures, trade measures against China. That news caused the commodity currencies, the Canadian dollar, New Zealand dollar, and Australian dollar, to fall in anticipation of slower growth in China. Also, U.S. two-year yields rose relative to most other countries' yields because of heavy issuance in the short end of the U.S. bond market. Now, remember, a few weeks ago, we actually had the dollar falling. We had stock markets all around the world and the dollar falling because of expectations of higher interest rates in the U.S. This time, they're helping the dollar, even though the higher yields at the short end mean a flattening yield curve, which is often a harbinger of a recession. Now, this week should offer us some respite from fiscal policy, as the focus will be on squarely on the central banks and monetary policy. There are three major central bank meetings: the Fed, the FOMC on Wednesday, and the Reserve Bank of New Zealand and the Bank of England on Thursday. In addition, we've got a G20 meeting of central bankers and finance ministers on Monday and Tuesday, and an EU summit meeting starting Thursday. So lots and lots of meetings this week. Now, the FOMC decision is, as usual, as close to a sure thing as exists in the financial world. The market's pricing in a 97.9% likelihood of a rate hike at this meeting. So the big question then will not be the decision. The question will be the dot plot, where the FOMC members, the committee members, give their estimates of where rates will be at the end of this year, next year, and 2020. Currently, their forecasts assume 3 rate hikes this year and perhaps 2 each in the following years. As you can see from the graph, the market's discounted 3 rate hikes this year totally, but for next year, it sees only 1 hike for sure and a 50-50 chance of another, with only a small chance of a 3rd hike in 2020. Now, I expect that the committee members will indeed revise up their forecast for rates at this meeting, and I expect that this will boost the dollar. On the other hand, if they don't, if there's no change in their forecast, I think that would be negative for the dollar, in my humble opinion. There's also little doubt about the rate decision at the Reserve Bank of New Zealand, the RBNZ meeting, either. Wednesday's fourth quarter GDP data confirmed the slowdown in growth in the second half of last year from the first half. So with growth slowing and inflation below the midpoint of their 1% to 3% target zone, there's really little reason for the RBNZ to change policy anytime soon. As you can see from the graph, market expectations of any rate hike this year, the green line, are fading. I'd expect them once again to continue with their neutral policy and to repeat their long-standing guidance that monetary policy will remain accommodative for a considerable period. The market reaction to this is likely to be subdued, shall we say. Now, the Bank of England is also likely to be on hold this meeting, but the market sees a near certainty of a rate hike sometime this year. In fact, it sees as much likelihood of 2 rate hikes this year, the purple line, as it does of 1, the red line. Once again, the focus will be on 2 questions. 1, is anyone dissenting it yet? And 2, what do they have to say about Brexit? Since the last meeting, the inflation rate has accelerated, but the latest data are coming out on Tuesday, and inflation is expected to retreat somewhat. Now, if those numbers do come out as expected, it will make it difficult, in my view, to justify tightening right now. Furthermore, the Brexit negotiations seem to have hit an impasse over Ireland, regardless of how both sides attempt to put a gloss on things. I think they'll vote unanimously once again to keep on hold, And I think sterling may weaken, pardon me, may weaken somewhat on the news. On the same day as the Bank of England decision is announced, the EU will begin a 3-day meeting in Brussels, a summit meeting. Now, this is a crucial meeting for the UK. Officials will have to agree at this meeting on a transition arrangement for the two after Brexit occurs. British officials say they're confident they can reach an agreement, but I'm not so sure. Nonetheless, the way the EU usually works is that 11:55 p.m. The night before, everyone papers over the cracks, pulls a rabbit out of the hat, and agrees to kick the can down the road, or whatever tired metaphors you want to employ for the standard EU modus operandi of muddle through. I expect they'll find some way to finesse the Irish problem for now and come to some agreement, and sterling may end the week higher as a result. Other major points of interest during the week include the G20 finance ministers and central bankers meeting in Buenos Aires. I don't think FX is likely to be a major issue this time. There doesn't seem to be any great disagreement on this point. I expect them just to repeat their usual boilerplate statement against volatility and against competitive valuations. The interesting question is what they'll say about cryptocurrencies at this meeting and money laundering. Reuters reported that Japan will urge the group to beef up efforts to prevent cryptocurrencies from being used for money laundering. If that results in more countries restricting the use of these inventions, I think we could see a fall in their price. Now, that's already a lot of excitement for 1 week, but in fact, it's no means all. There's actually a number of important indicators coming out during the week, particularly the preliminary purchasing managers' indices for the major economies on Thursday and Japan's nationwide consumer price index on Friday morning, Japan time. And of course, we look forward to more people getting fired, indicted, or subpoenaed in Washington. Never a dull moment in U.S. politics nowadays. This is Marshall Gittler bringing you the outlook for the week beginning the 19th of March. Thank you for listening, and good luck with your trading.